All right, with that, it is now time for us for a fantastic session ahead. And let me tell you, the next 25 minutes are going to change your life. As we have a plenary session, 6 exclusive tips on wealth management. Do we have that as a topic? I believe we can get a slight nod from our speaker joining us. So, ladies and gentlemen, on the stage, who's going to be joining us is a finance and strategy expert with demonstrated history of working in the corporate sector, strong operations professional, skilled in strategy, finance, budgeting, business planning, organizational structuring, M&A, corporate governance, and business turnaround. Trust me, his expertise of over 30 plus years. Mr. Kannan, how many years it's been now? Over 40 now? 40 years. Is going to truly reward us with a lot of expertise. The corporate and economic advisor, ex-TCS, ICICI Bank, Hinduja Group, Mr. R. Kannan. Ladies and gentlemen, a warmer round of applause.
Good afternoon to all of you. I would like to thank Dr. Narendra for giving me this opportunity. We called it as investment tips, but I am taking a structured approach. Of course, when we discuss, some points will come up on how you look at investments. Finally, I have 4 pages on age-wise, asset-wise, what kind of asset allocation people can look at. There will be the 4 final slides. I'll just take you through this presentation. I know most of you are tired attending from early morning, 9 o'clock. Is it moving? 1 minute. It's not moving? Down, huh? Oh. So I know most of you have already made your wealth, and many of you are very successful investors. So it is like talking to experts. I will not elaborate this much. So basically managing financial assets and investments. I'm going to talk about 2 perspectives. One is a corporate, other one is individuals. Personally, myself, I helped 2-3 corporates in terms of multiplying their market cap by 30 to 50 times by adopting a very high growth approach, which they achieved in the last 5 years. A company which was just about 200 crore market cap about 7 years ago, today they are 21,000 crores market cap. So like that, I have advised companies. Of course, it's a principled and basic approach which they followed in terms of strategy and growth, and they were able to multiply, other company has multiplied by 10 times. It's not by market making, it is by real performance. So it is for corporates and individuals. And one reason why we are talking about this subject is rapid economic growth, and we are an emerging market. You must have heard right from the morning that India's story is intact for another 30 years. I started investing when I was 21. The first job, the first investment I made was a company called Ponds India. The second investment I made was Cholamandalam Investment. I can tell you all of them gave, I think what I invested 10 rupees, today I don't know how many times it has multiplied. Cholamandalam Investment I invested 11 rupees, 10 rupees share. So how many times it has multiplied, I don't know. So, but of course, I also had investments where the companies are not there. But I got a multi-bagger investments which helped me in the last 40 years. Importance, then objective, you want to enhance financial growth, mitigate risk, and optimize returns. So one of the major aspects which talks about estate planning, these were people who have more than 10 crores, 20 crores, 50 crore assets. That concept is emerging. And tax planning, I know many of you are chartered accountants, and many of you must be using chartered accountants. So that is one more way you can increase your wealth. And what are the strategies? You allocate assets, diversify your assets, and risk management. Risk management, of course, as a common man, we will not understand risk, but when I am going to present those kind of normative structure, asset mix, that is a kind of guide. It is not the same. There are people I know who made money investing only in real estate. They are not invested anywhere. They invest, they forget, they had multi-bagger returns. So there are people who invest only in stocks, but there are people who invest in all assets. So wealth management, so basically corporates, they have to grow. If you go to any of the big 4 consultants and say you drop a corporate plan for me, they will look at a growth of 25% CAGR for 10 years, which means 10 times your growth in 10 years. So that is how L&T, which was an infrastructure company, which got into finance. That is how Godrej and Boyce, which was a consumer company, got into real estate. So there are strategies for corporates where you have to be in sectors which are growing fast. If you look at most of the companies in India, large groups, they all started with textiles. Sorry, whether it is Tata's, Birla's, Reliance, everybody started with a textile company. But all those textile companies which survived, those are the ones which diversified. So then wealth management, we will discuss about individuals. And of course, all of us have got different levels of risk tolerance. When I was working in corporate sector, 80% of my colleagues, they were never directly investing in markets. They were highly educated, IITs, IIMs. One, they did not have time. Second, they did not have inclination to analyze the companies. So they were investing in either in mutual funds or they were using a wealth manager. Yeah. So the risk tolerance comes, what is the kind of risk somebody can take depends on the ability. A long-term objective, we heard the speaker here. Most of the speakers who came and spoke, we are all worried in the last 3 months. I learned option trading about 3-4 years ago. Fortunately, I was making good money every month from option trading. And but in the last month was not a good month. After a long time, 1 month was a bad month. So I have stopped. Also people saying that now the market is so volatile, so you should not play. So the risk, how much money you have, based on that you can take risk. We hear about millions of people from India invested in crypto. But I can tell you 80% of them must have invested in 1 or 2 cryptos or 3 cryptos and they made money. Yeah. But those who have 50 crores, 100 crores, they can make. We will see the asset allocation. Individuals focus on wealth protection, growth and future. What is the common goal? Optimizing returns with manageable risk exposure. So I tell you, 30 years ago in India, companies didn't want to show profits in their balance sheet. Yeah? Because the tax rates were very high. They said that we didn't want to pay a very high tax. They never realized that if you go to market and the share can be equivalent to money, cash. So that culture actually was brought by Reliance Group. In India, that through share market, you can create wealth for shareholders. You can make companies grow very large. So that culture, equity culture, was brought by Reliance as a group in India. After that only our stock markets have started picking up. So now you see companies, even when they don't have profits, they show profits, where they want to keep that market capitalization at a high level. So the market capitalization is a currency for companies, With that, you can buy companies, exchange shares. You can sell the shares and buy companies. So a lot of advantages of a good market capitalization. It reflects the size and financial health of a company. Higher market cap indicates stronger investor confidence and easier financing. Factors influencing market cap: revenue growth, profitability, and stock price. Like I told you, if companies are able to grow, if you see some of the companies which have grown very fast, like Reliance, HDFC Bank, etc., most of them have grown at a compounded annual growth rate of more than 25% per annum. That's how they were able to achieve. Yeah, I started my career in IT industry. When I joined the IT industry, the size of the industry was $100 million. Number of people working in the IT industry was 3,000. And two companies had 60% market share. Tata Burrows, the number one, Tata Consultancy, number two. Only 3,000 people. Today, the industry is $250 billion. Imagine. It's all the power of growth, 25% growth. I went and made a presentation. There is something called All India Young Managers Competition for exports in the year 1992. We went and made a presentation on software industry and said that it can grow at 25% annum for years to come, and software will become the leading exporter in India. We didn't even get a consolation prize. Somebody who went and made a presentation on aquaculture got a prize. Somebody who went and made a presentation on agriculture got a prize. We didn't get a prize because nobody believed the story of IT. Yeah? So that is the power. Now we see all the IT companies, the kind of value they are creating. Then impact on branding. It's the other thing. I always used to joke about 20 years ago, if Mr. Narayana Murthy wanted to come and start an automobile company, then 10 rupee share people will buy at 500 rupees. We all know in one power company where there was no land, no project, we all went and invested 550 rupees per share. That is the branding, power of branding. If you have the brand and people are willing to come and invest. Then importance of corporate growth, as I told you, that is always important. And what is the strategies to increase market cap? You have to show consistent growth. I'll come to case studies. You have to expand your markets. Now what HUL is trying to do, from their core business they are not able to grow. So now they are cash rich. So they are identifying companies which can add to their growth. So they started buying those companies, mergers and acquisitions. Innovation, product diversification. I tell you, 25 years ago, most of the pharma companies in India used to spend 0.2 to 0.3% of their turnover on R&D. Today, most of the pharma companies in India, they spend close to 8 to 12% on R&D. That is why they are able to compete in US and Europe markets. And similarly, product innovation, product development department was not there 30 years ago in Indian companies. Today it is one of the most important departments. Strategic leadership, of course, leaders make a big difference. We all know HDFC Group. Mainly it was because of Mr. Deepak Parekh. We all know Reliance Group. It was because of Mr. Ambani. So like that, there are leaders who made companies. And of course, the most important is investor relation. We have so many public sector companies with good health, good growth. See their valuation compared to their peers. Nothing. Yeah? So that investor relation, I think yesterday, the Department of Investment and Divestment, they had a program on how to create value for public sector companies in collaboration with the Capacity Building Mission of India. Reliance Industries, how they created wealth. When Mr. Ambani came, they were not even in the top 1,000. So Dr. Narendra talked about audacious goal. He said that I wanted to be number one industrialist in India. So whatever they did was following that vision, audacious vision. So that is how they have grown the company. So they started with textiles, but whenever a new industry comes which is going to grow fast, so they entered that industry. That is how it is called a corporate life. A corporate's life depends on the average age of the products in your portfolio. So, of course, Jio, we all know that how they revolutionized. There were some sessions on digitization and all. So, Jio was the first one to use Aadhaar card as authentication to acquire a customer within 30 minutes, which was not done before. That's how they are able to acquire customers very fast. Then aggressive mergers and acquisitions in the initial period, they acquired many companies. Even today they are acquiring companies, but compared to their size, it's very small. And of course, 5-6 years ago, many of you must have attended or heard the speech of Mr. Mukesh Ambani in the AGM. It's an 11-page speech. It's all about platforms. He was looking at business, every business as a platform. Yeah? So, technology, of course, strong leadership, and high market cap growth. They always kept the investor very happy. Only the last 3-4 months, I think we are all not happy. But otherwise, they are always keeping the investors very happy. Coming to Tata Consultancy Service, I tell you, it would be 50% larger than what it is today if they had gone public in 1995. They are very late to go public. Infosys went public very early. So, it was listed in the US Stock Exchange also. Whenever analysts analyzed in US, the topmost company which was coming in terms of growth was Infosys. So, that was on top of the mind of CEOs and CFOs. So, whenever they went and bid for projects, they were able to bid 10% higher than TCS. Actually, if you see the top 4 IT companies in India, their capability, people capability is same. Processes are same. There may be a difference of 1% or 2%. But Infosys was able to differentiate because they went and listed the stock and it was a fast growing company. So they are able to extract 10% more margin than TCS. So after TCS got listed, they realized their mistake. TCS always used to compete on low price. Infosys always used to compete on differentiation. So TCS changed its strategy. Now you just see I think the margin of TCS may be a little higher than Infosys. So if you see, so right from day one, and one more thing, TCS never had a leadership problem like Infosys or Wipro. They used to have leaders coming, going like a bus stop. Yeah, similarly, you look at Wipro, they had 2 CEOs, 3 CEOs, it didn't work out. But TCS was a process-driven organization and importance for people were very less. So that is the main reason how they have created value. Coming to HDFC Bank, like I told you, in my career I must have taken 3 times housing loans. The first time I took housing loan was from HDFC, not bank. Then later on 2 other banks. I'll tell you, when I went and repaid the money in HDFC, over the counter they handed over my document within 3 days. The other 2 banks, one bank took 3 months, other bank took 9 months to hand over the document. So HDFC, I think Mr. Deepak Parikh always told his companies that system and procedure are more important than people. So that is what has helped. And plus, when HDFC Bank was listed, he was the first one to go and list it in US. And also he gave publicity in Wall Street Journal, New York Times, CNN, etc., etc. And this bank always had a high book value to price, price to book value. They are the leader in the world for a long time. I don't know, last 2 years some issues are there. So that is the other one. So these are three good examples. Of course, you should take Infosys also, now HCL Tech. Of course, many companies are now doing well. We find Adani as a group where other groups were not treated. They identified infrastructure as an opportunity. So they built a very big plan for infrastructure. So they are succeeding. So introduction, of course, it's a professional management of financial assets. It is to build wealth. I know all of you have investments in stocks, bonds, real estate, fixed deposits, mutual funds, some of you in cryptocurrency also. And goals are capital growth, income generation, risk diversification. Horizon, short, medium, and long term. Of course, like I told you, if people start investing early, yeah, you can have multi-baggers. Of course, I also lost a lot of money in mutual funds in the year 1992, but not 92. I invested in 15 mutual funds. Only 3 are, I think I can encash now. 12 are not be seen. Yeah, understanding risk tolerance, because the culture of mutual funds have changed now. A risk tolerance assessment, you have to then how you want to diversify, asset allocation. One more thing, regular monitoring. Of course, if you are going to have a wealth advisor or if you are investing in a SIP, etc., you don't require to monitor. But if you are directly investing, then you have to regularly monitor. Otherwise, also you have to regularly monitor. Because nowadays, we read in papers that your relationship manager took signature and he has ran away. Yeah, so it's better to monitor. Yeah, then rebalancing the portfolio. So first, we have to have understanding financial goal. When I started investing, I did not have any goal. I just, for sake of investing, I invested. You have to choose between stocks, bonds, mutual funds, and real estate. What we hear in the last 6 years, the people who invested in SIP, they have benefited a lot. Because what has happened was, like in life insurance, mutual funds have started giving commission to the distributors. So all the distributors started pushing for mutual funds. So since a lot of money was coming, mutual funds started playing a role of a FII, filling in the role of FII. So today, I believe SIP every month is about 25 to 26,000 crores. That's a large amount. Every year, 3 lakh crores comes through SIP. Yeah. So risk versus return, you have to evaluate. Of course, depending on the age, you can take the risk and the assets you have. Time horizon, liquidity is very important, and rebalancing. I will not elaborate. Equity investments, we all know. Invest in stocks, etc. Of course, then mutual funds are there. Exchange traded funds are there. We have some gold mutual funds. And there are, I think, foreign oriented traded funds also. Debt investments, most of us invest in fixed deposits, but corporates, they invest in bonds also. So bonds, government bonds, of course you have government floating rate bond, they give you 8.05%. If you are a senior citizen, 30 lakhs, 8.25% to postal saving. So like that, fixed deposits. So one of the reasons what bankers were saying was that since mutual funds were giving a lot of money, people stopped investing in deposits and money is going towards mutual funds. So they are saying that give some incentives so that people will start investing in bank deposits. And other options are, of course, if you have real estate, I think some properties, I don't know, some of the commercial properties, you can get up to 6 to 8% return. Otherwise, in a real estate, you get 2 to 3. And gold bonds, of course, you get 2.5%. But real estate, now REITs are coming. Earlier, real estate means it's totally illiquid. Now the REIT as an instrument has come. So if you invest in REIT, then anytime you would be able to sell and come out. Gold and other precious metals, we saw in the last year, it is appreciated a lot, and they are saying this year also there is a scope for good appreciation gold. And insurance, of course, all of us have to have. And tax efficient, some of you must have invested in tax efficient investments. And tax deduction exemption. There are many ways you can reduce the tax substantially that increases your wealth. Of course, if you are a CA, you must be doing yourself. Otherwise, you must be having a CA helping you. Of course, tax loss harvesting. This is also being recommended by stockbrokers today. They tell you how to reduce your capital gains tax. They help you. Tax harvesting means you book a loss of the share and buy it again. So next year you can make a profit, something like that. Yeah. Estate planning, this is one area, of course, this is more relevant for high net worth individuals. We are talking about will, trust, estate taxes, estate planning strategies. Now lawyers, auditors, tax experts are helping people in creating this. And of course, fintech revolution. What we hear is that 45% of personal loans today, the banks are being sourced by fintechs. 45%. So their role has become very, plus also we have rise of online platforms, mobile apps for investment. At one click, you would be able to see what is your portfolio, how it is performing on a continuous basis. There are robo-advisors, digital payments and mobile wallets. Of course, data analytics and AI. So, I will just give, you have to give me 5 minutes, I will finish it. We all hear about Warren Buffett and what he has done. One is that he takes a long-term investment approach. Second is he looks at cyclical stocks. He looks at companies which do well in economic expansion, like Tata Motors. Whenever economy expands, Tata Motors will do well. Automobile will do well. Strong brand. We all know, you invest in top 10 companies today, you forget for next 20 years, maybe 2, 3 will not do well, but 7 will do well. Yeah? Strong brand. You avoid a trend, steers clear of potential fates. Sector expertise. Whichever sector you are working, you understand that very well. So you invest in companies, your competitors, your suppliers, competitor suppliers, competitor dealers. That is one of the easiest way. You know what is happening to the industry. When to exit and all, you know what is happening to the industry. So if you have a sector expertise, focus on stocks where, which sector you are working. And team collaboration. I know there are groups in Mumbai where they meet Saturday and Sunday to discuss what stocks to buy next week. So that happens. And buying during downturn, people are saying many stocks today are at the bottom for India, they are saying. Then generating passive income. I tell you 30% of my portfolio is all high yielding stocks, dividend yielding. So I purchased, most of them are public sector, but they all went up 7 times, 8 times, 10 times. But now they are down by 25, 30%. But still they went up by 8, 10 times, but I get good dividends. Yeah, ITC is a good one. So high dividend yielding stocks, even at 440, I think 10 rupees is a good dividend for stock like ITC. So that generates passive income, disciplined approach and ethical practice. And coming to our own, Mr. Rakesh Junjanwala, what he has done, he had a passion for investing, he had the patience, he looked for opportunities. I remember he was buying Bombay dyeing at a very cheap price. I think he purchased Tata Motors at a very cheap price, Titan at a very cheap price. So Then knowledge and research, he used to do a lot of research. And he will avoid unnecessary risks. He diversified his portfolio, adaptability, and of course, he used to discuss with other experts. Then he used to make a decision. Then learning from mistakes and focus on growth. So the last 4 slides. So if I put age group wise, this is only normative. Like I told you, sometimes people have 100% in real estate also. I know most of the government officers, they invest mainly in real estate. They will have in 10 cities. Nothing to worry. Yeah. And so there are people 100% real estate also. That is in other assets. Other assets you can have real estate, you can have cryptocurrency, etc., etc. So when you are the young age group, you can invest 70 to 80% in equity, and above 55%, above 55, only 50% in equity, where you require regular income. So debt should be 40 to 50%. You should always have a cash at hand. That is always important. Cash is very important, whoever it is. Liquidity, as I told you, is very important. Gold and other assets. I will take just 3 more minutes. 1 to 5 crores. Similar, if you have 1 to 5 crores, youngsters can invest 75 to 85%. And again, above 55, not more than 40 to 50. Yeah. So cash and gold. This is only normative. If you ask the experts who have spoken before me, they will give you a different approach. Yeah? Each one will have a different approach. Each one is an expert. But I am talking about generalized approach. Yeah? Then 10 crore and above. If you are 25 to 35, 90% you can invest in equity. Yeah? And other assets, gold 5 to 10. 100 crore and above, high net worth. Yeah. So like this, it all depends on your asset base and age. Whatever risks you take in a measured way. The best way to invest is invest in industries you understand, invest through mutual funds, invest through SIP, and always consult experts. And better if you have a large asset base, better to have an advisor. Yeah? These are all what I wanted to share. Okay? Thank you.
So, Mr. Kannan, thank you so much for sharing that knowledge. If we have Mr. Sandeep Parwal in the audience, Sandeep, if you're around. If not, if anybody from any of our valued sponsors is around, we just request your company on stage. Otherwise, Mr. Mehta is there. Mr. Mehta, if you can do us the honor, Mr. Kannan rightly said your name, so let's get you on stage, and please allow us an opportunity to felicitate Mr. R. Kannan. A warmer round of applause as we celebrate his knowledge, and with that we break in for a quick coffee and tea networking break. For the next 20 minutes, feel free to maneuver around this hall. It's at the back in the hall itself. At 4:30 is our next session. So stay tuned. We still have 2 more sessions on today. And thank you for joining us. Thank you. Over to all of you for having your coffee and tea. Thank you.